I've been in and around, insurance claims since before I had my license. Somebody in the office would pick me up. Hey, I need help inventorying a burnt down home. Ultimately, nobody plans to have a loss. And when you do, it's important to make sure that you're fully indemnified. There's multiple different coverages in the policy. You have a multifamily building, for example, you have loss of income or loss of rent. Our job is to become an expert in your insurance policy. And so that's step one, right? Let's have a clear path. Let's know where we're going. And then each different coverage has its own process. Welcome to another episode of the Straight Up Chicago Investor Podcast. I'm your guest, Mitch Schoeneman, and with me, as always, is your hosts, Tom and Mark.
Wow, he tried making eye contact with us, too. I like that.
Yeah, there we go. We'll take it. You're off the hook.
Yeah?
Nice
good?
job.
Yeah.
All right, cool.
All right, man. So, dude, you're looking at a building right now. You're taking on a project. What does that look like right now for you?
I'm busy right now. We have we're in that weird state where we've been busy, and I finally bring a couple flips to market. We have a couple more going, and hopefully taking down this bigger project. I don't want to jinx myself.
So the ones you just brought to the market, you're getting good activity? How's that?
Yeah, good activity. And there's one that's just drywalled right now. We're having good activity. It's still.
So you're kind of trying to be a pre-sale.
Yeah, it's still hot out there, right? It still feels good. It still feels good to be buying buildings.
Nice.
Maybe I'm the only idiot out there. I don't know.
What? So are you? Right now we're going into July. What's your? When are you gonna have everything finished? All the ones you have active right now? Because I imagine there's a market timing here.
Yeah, it sucks. We're going to be bringing two very big projects to market in October and December, right? Not ideal. So you build in all right, I'm probably you may get a buyer, right? Especially if you can do it pre-sale, right? But if not, it's very likely you hold till March, April. You just got to build that into your.
Is that a delay in doing the job, or is that something that
This is timing of buying the building.
Okay.
But yes, that has happened before. There's a 6-unit we gutted, huge hangups with the city. We legalized the unit and just huge admin back and forth, and we completely missed the rental season. It took us from July to November or whatever. The delays, and that one was more self-inflicted. This is if you buy a building in November and it takes 12 months to deliver it, it is what it is. You come out in November and you roll with it and you underwrite it.
And you're even looking at this building that had a fire. Well, no, you're going to know today. That's the exciting part.
I don't really want to talk about it. In case I lose, this is going to suck.
All right. So
I went heavy. I did not skimp on my offer.
So that's great. But that's a good thing for everyone listening.
If I lose it, tip the hat to the other guy. I did not.
You did everything you could, right? You put your best foot forward. There's no regrets, right?
I've offered to board up the building for the guy. I've offered to give him the garage. I said, what else will it take? I've gone to the absolute highest number I can.
Give him the garage. I see him walking down the street with the garage on his back.
I was like, whatever you want, man. I'm here. So I found a picture of the building from 100 years ago.
Wow,
it was pretty cool. So I get the building. I'm going to take that and frame it, and that'll be in my entryway.
Where'd you find it? Just online, or?
Yeah, my insurance. I got my insurance quote, and they found it.
Oh wow.
So
that's cool.
All right. So enough about me. Let's get moving here.
All right.
I feel uncomfortable talking about it. I feel like I talked for 30 minutes.
All right, our housing provider tip of the week. We're going to go with the theme of today's episode, which was around insurance. So there's two questions I want you to ask your insurance broker. One, what are all the add-ons? I'm going to say add-ons. I'm using the wrong word there, whether it be sewer or law and ordinance, all these things that you could be adding to your policy that you might need if you have a policy. And then the second question is, how much was my premium change if I adjust my deductible up? Because most of the time, especially if we're talking specifically right now about real estate investors, you're not going to file small claims. You're going to file claims that are going to be 10, 15, 20,000. So if you have a $5,000 claim, that you're probably not going to file for it. So why do you have a $1,000 premium when you could be saving that money in premium based on a deductible and maybe putting that towards having sewer backup or having law and ordinance? So two questions for your insurance broker. Make sure you're asking them.
All right. Today's guest. Thank you to Renovo, as always. They threw a phenomenal event. That's where we met and started talking. It's like, man, we got to have you on the podcast. You have some great value to add, great stories. Our Mitchapalooza episode. We got to find a way to work that into our title here. So hopefully we get creative with it. But insurance is one of those things. We've had a few insurance episodes. I don't think we've talked in this much detail about what to do and how to be made whole. So without further ado, Mitch Schoeneman from Schoeneman Co. Mitch, welcome to the Underground.
Thanks for having me.
We are excited, man. We talked about this at a Renova event months ago. I know we had a few reschedules, so glad I saw it in the calendar. I was like, oh, finally, we're getting this guy on here.
Yeah, no, I've been looking forward to it. Thanks for having me.
Yeah, so we have, man, we're going to get into some crazy stories. Before doing that, though, you need to explain, like, how do you become an insurance adjuster? Because, going to high school, you're probably not like, you know what I want to be when I grow up?
Your guidance counselor.
Yeah, how do we fall into this?
Like I was playing like Little League baseball, and I was like, hey, I just want to be an insurance adjuster, public insurance adjuster when I grow up. No, actually, so my family, has been in the insurance adjustment business for almost just under 65 years. So
oh, wow.
My company was actually started by my grandfather, 60 plus years ago.
That's like 3.5 lances.
There's, so many lances. And then,
But the sad part is 65 years ago is only 1960. That doesn't seem long. But
right.
It's a
And
long
we were just
time ago.
talking, right? It's like, right, the 60s were closer to the 90s than we are now, right? Or something like that. So my grandfather actually started our business 60-something years ago. He was like a glazer by trade. So he was like putting storefront windows in places. Saw that there was like a need, started doing insurance adjusting, fast forward, my dad, my uncle, and then now I'm the third generation to kind of run the family shop. In high school, I would help out in the summers. They would need help around the office. It's a little smaller mom and pop operation. So like when a lot of my friends were like going out of town and things like that, for winter break in high school and then in college, right? I was doing like inventories and burnt down warehouses, right, on the north side of Chicago. So there was that. I went to college, thought I was going to do finance, got a couple good internships at Morgan Stanley and banks and things like that, all to lead me back to, what are you doing? Like, you're going in the business, right? So here we are. And, I've been in and around, insurance claims since before I had my license, right? We would just, somebody in the office would pick me up. Hey, I need help like inventorying a burnt down home or whatever. So that's how I started. And it's just part of my DNA now. And, we're here.
Was there ever like an internal like struggle, like I don't want to do insurance, or you're kind of like in the back of your head, like I can see myself doing this forever?
I like helping people. I've always liked helping people. And I think it was ingrained in me in such a young age that I think it was like a natural thing that it was something I was going to go into. Never really a big struggle. I mean, a lot of my friends had like more glamorous jobs, and I'm like in jeans climbing through like a burnt down building in 90-degree heat, right?
That's way cooler no matter what.
But like, perspective, right? Now it's like, it was great, but like at the time, I was like, what? Like, what do you do? Like, I don't get it, right? So yeah.
So when we think of insurance, a public insurance adjuster, usually it's like, hey, fighting the insurance company to make sure like you're getting your money's worth on your claim. There's a lot more that goes into it though, right? Like you guys are doing estimates. Can you just give us like the 101 of, hey, you have a fire at your building. What are all the ways that someone like yourself would help besides just fighting the insurance? Fighting's probably not the wrong word, but like besides just
Working
dealing with
with.
getting the highest dollar from the insurance company.
Sure. Yeah, no, absolutely. I mean, ultimately, right, nobody plans to have a loss, right? And when you do, it's important to make sure that you're fully indemnified, right? You're made whole. And what goes into that, there's multiple different like coverages in the policy. So if we have like we're talking to property investors, right, on this show. So if you have like a multifamily building, for example, you have loss of income or loss of rent. You have code and law and ordinance coverage, right? You have your dwelling. You may have some business personal property. You may have some debris removal coverage. There's all different facets of the claim. Our job is to become an expert in your insurance policy, right?
So is that step one? Send me the policy.
Send me the policy. Step one, send me the policy. I mean, reading your policy, it's not like a natural thing, right? Like you have a relationship with a broker. They send you your policy once a year. It's not like every couple months you like reassess and read your insurance policy, right? So most people actually don't know what's in it. and like what promise or guarantee they bought from the carrier, right? And so that's step one, right? Let's have a clear path. Let's know where we're going. And then each different coverage has its own process. So as far as like the dwelling coverage and the building scope, right? We're going to go in, we're going to itemize every nook and cranny of every inch of the building, right? We're going to put together our own kind of set of blueprints for your building. We're going to build it back, brick by brick, screw by screw. And, now different than, 60 years ago, right? When we started, right? A lot of things were done analog. Now there's like a ton of new cool technology and tools like associated with that. So we could actually break down the rebuild cost of your building to the box of screws and how much labor goes into putting in one screw.
How insurance policy is typically 40 to like 70 pages long. Like, how much of that is it really just the decks that you really need to see to understand coverage? I mean, how much of that is really important in the end of the day for someone that's trying to review a policy?
Yeah, I mean, I think the big thing is obviously your deck page, right? The declaration page is where everybody's going to start because it's going to spell out, it's going to spell out all the different coverages. As like master policies and bigger policies and people who have, multi locations on policies, those types of commercial policies, you need to read a little bit more. Standard, homeowners policy with the deck page, But yeah, start with the deck page.
So deck page is usually one page. What's something people are typically missing on deck page? Like now you came in and they had a crisis already, and now it's like, oh man, you missed that. You would have seen that in your deck page.
Yeah, so the like additional endorsements typically will like fall off or won't have like the specified coverage amounts on the deck page. So for example, things that aren't standard in a policy: sewer backup drain overflow, law and ordinance, extended dwellings, protective safeguards that, you're obligated to fulfill, but you didn't know you had to do it, things like that. Will say something on the deck page, but you'll need to like further flip to actually see, what those coverages are and the definitions there.
The shame about all those things is the ordinance one, the rents, the sewer. Like most people, when they're upfront getting the insurance quote, they don't realize sometimes if it's a bad broker, they're not even telling them those are options. So they come to you and they're like, I didn't even know that was an option. So that sucks. I know I've been in that situation. Or they're nitpicking, saying, I could trim off $110 and I'm not going to worry about lost rents.
Well, the other thing too, they go to an insurance broker and like, they're looking for the bottom dollar price and not reading it. It's just like price. And it's like, dude, like the whole purpose of this is so like,
Protect.
When shit hits the fan, like you're good.
The one chance you're going to get your value out is when shit hits the fan, and it's like, and you shorter yourself to even get the opportunity to actually utilize it.
Yeah.
Yeah, it's like, I won't say it's a shame, but everybody has like different, what they're trying to accomplish. And, especially recently, right, with rising costs of insurance, and people are like, oh, that's way too much. Like, what can you do, Mr. or Mrs. Broker, to like save me some money? Okay, well, I don't really know what this coverage is. Like, I'm going to take this off. I'm going to take this off. I'm going to increase your deductible. I'm going to give you an ACV policy versus an RC policy, et cetera. I'm going to add co-insurance. And these are things that most investors, as sophisticated as they are, they're looking at, okay, all right, my insurance cost is $7,000. I got it down from 10. I'm happy. You have a claim? Well, if you have a co-insurance ACV policy that doesn't have law and ordinance, you're in a world of pain.
One of the things I think I've learned mostly when it comes to insurance, the mistake I made, and I try not to do the same more, is I'd rather have a higher deductible and have those additional coverages. And the chance you come up, if you actually find a claim, an extra $1,000 or $3,000 deductible, like, that's probably not that relevant versus not having 24 months of lost rent.
100%.
Insurance is for like catastrophe, so I don't care. Like the deductible, I will take the highest deductible possible.
We ran $10,000 for a deductible for our stuff for the longest time.
State Farm wants you to go to 25.
Really?
And now that's like pretty aggressive, but still like.
Yeah.
For sure, when like you want to be price conscious, and like if you have like a staff of maintenance folks, right? You're an investor, you have a few properties, you have a handyman. A lot of times, if it's a claim under 10,000 or even 15,000, maybe even 20, right? You're gonna like self-perform it perhaps with your own people, and like not make a claim, right? So having the right coverages is the most important. That's why I like a lot of our clients and friends, like they'll say, hey, I'm up for renewal. I was riding my broker to save me money. Like, could you look at this though to make sure like I don't get screwed, right? And so like I'll review them all the time. I'll be like, actually, you are going to get screwed. You have an ACV policy, or you have 80% co-insurance.
ACV, actual costs, right?
Actual cash value.
Actual cash value.
So like, your drywall is 10 years old. The insurance company's going to pay you for 10-year-old drywall. You can't replace 10-year-old drywall at today's cost, but those are just like little things and little.
So they depreciate the value of what they're actually going to pay in the
Correct. So,
payout.
You have a claim that the replacement cost is $100,000. You had an ACV policy. Well, you're going to get the replacement cost minus the depreciation, and that's how you get your actual cash value.
Yep. All right. So you mentioned, going back a little bit, you guys would figure out how to, what's it going to cost to rebuild the building or fix whatever happened. Is there anything investors can do on the front end? So when something like that happens, like, hey, I have all the information. Like, as an investor who's proactive, what can we do so if a catastrophe happens, it makes your life easier and we are made whole?
Yeah. So great question. From the dwelling perspective, it's always good to as simple as it sounds, like keep the bills and receipts from when you like are rehabbing or maintaining a unit. Because, part of like any negotiation with the insurance company, assuming you had a replacement cost policy, is that depreciation amount. So showing the like paper trail of like how long or how well you keep your building helps reduce that depreciation. So that's one. Another thing is, more for like businesses or manage, big buildings that have a lot of inventory in stock, but like keep an inventory, once a year, just kind of do an inventory of what you got going on there. And that helps us all tremendously.
Okay. All right. So you come in, you're reassessing, like you have a fire. Let's go back to the example here. You're reassessing, what's it going to take to rebuild this? What else is happening? Because as the investor, you probably got to board the place up. You got to put tenants in hotels. There's a million things going on.
Yeah. So what we do, number one thing, right? You have to protect your property from further damage. I'm sure like you've heard it, multiple times, right? So, that's because one, right, it's your obligation to the insurance company to protect your property. You also need to protect yourselves from liability and other problems. There's so many, people out there trying to get landlords and which we're all aware of, right? So, clean up the exterior, board up the building. We would, help manage the relationship with the tenants. So if, for example, your insurance policy doesn't always cover your cost to put them in a hotel, right? But you would be covered for your loss of income. Some investors are like, hey, like, this is a 4-unit building, and like I have like a personal relationship with the 4 people that live here, right? And I want to take care of them. Most policies don't pay for you to like put them in a hotel for 30 days, right? But what they will pay is your loss of income. So we want to like size up your loss of income claim fairly quickly.
Their renter's insurance should cover that if you're
their renter's insurance
Another
should cover
reason,
that.
tell them to pay $10 a month for renter's insurance.
It's like
and their stuff. Everyone wins.
We require
one tip, not getting off track, but like certainly is helpful. But like as property management companies and as insurance costs go up and we raise these deductibles, more important to like have these like tenant liability policies in place, because we have, clients in big buildings who have $50,000 deductibles, but there's a cooking fire, right? And like we actually help landlords and property management all the time just file liability claims against the tenant who like caused damage. Keeps their insurance down, they're still indemnified on an actual cash value, but like 100% of nothing is nothing, right? So that's just like a Tuesday tip.
There you go. Extra gems. We get an Instagram reel out of that one. All right, so yeah,
going back to your question, right? So we're going to gather the leases, your rent roll, your Schedule E from your tax return. We want to start, we have somebody like in our office dedicated to your loss of income claim, right? We're going to start like sizing up that. Insurance company wants to argue your continuing versus your non-continuing expenses. Depending on the size of the building, a lot of times your expenses are going to continue, right? But they still want to like kind of ding you on like, well, you're using a little bit less water. You're using a little bit less gas, right? We're going to say, no, because like somebody's still working in there. You need water to paint, et cetera. So that's one part, right? So we're going to start doing the building scope. We're going to start doing the loss of income valuation. And then if there's business personal property or personal property, we actually send like people in to inventory absolutely everything that's in your property.
Okay.
Because everything has a value.
So what are some things that investors don't think of on that list?
On the property list?
On the
business
inventory.
Personal you have tools, you have supplies, you have tools, supplies, you have extra cabinetry, you have extra tile, you have all this stock that like you utilize when, you're rehabbing a unit or whatever it is. It's like forgotten about like 95% of the time.
Okay. Go ahead.
I want to go back because I think the questions I get all the time is, all right, so personally for me in Chicago, I've had 7, 8, 9 fires at this point, last 23 years.
We don't know each other yet.
And but I found out about every single one of those fires from somebody calling me trying to board up my building. No one else. Tenants ran and left and went and moved somewhere else. Like, I don't know anything. But that being said, when somebody that's at 2:00 in the morning, where all of a sudden they get 1,312,773 numbers on their cell phone, like. What is somebody supposed to be doing? Like, what are you not supposed to do with those people? Like, that's a huge part right here that I want to make sure we
it's a huge part. Sometimes it could be a huge problem, right? Like, how do these people even get my information, right? In any industry, right? In any industry, there's the good and the bad. A lot of the board up companies, like they're literally driving around in circles, listening to a police scanner.
It's crazy.
And then like, they go to your building and they're like, okay, I'm going to call every public adjuster I know and give them your info, right? And in hopes that like they refer some business and get some sort of.
So like bird dog type.
That's what they do. Wow. Yeah. And
bird dog fires. Like
it's
a weird life, man.
it's a very bad business. It's a very old-fashioned part of our business. We like my company specifically. Like, I don't like some adjusters like own board-up companies because that's how they get their losses. A Schoeneman Company, for an example, like I don't own a board-up service because like that's not the kind of business and like I want, right? But we want to like create the relationship ahead of time so that when that happens. And you're like, hey, there's 5 trucks of unmarked vans. There's 5 unmarked vans in front of my building. Like, what should I do?
It's super intimidating.
Yeah,
of
course.
Then I've actually I thought I hired one guy and I hired the other guy. They both had 312 numbers. And then all of a sudden I get a bill from this guy. I've gotten bills from those guys that didn't even do the work before.
Yeah. They were there for a couple hours. You talk to them, they send a bill.
But it's just highly stressful. Like, so if they know you now if they're listening to this, but like, what do they tell those people? What do they say? Because they're just as well as I do, they're putting the fear of God in you. Like someone's going to come in here, you're going to lose all this. They're saying things that they can to get you to say, here, $1,800 or $3,600, whatever it might be. Or
it really is.
It's not usually a number. It's hey, I'll just board it up and send you a bill later.
Right. Yeah, typically that's how it works. Or it's like, oh, we're going to board it up. Like we work for the insurance company and like we'll deal with them and like
we'll take care of you. Go back to bed.
I mean, there's a time and a place, right? If it's during the day and people have like, apartment staff or, maintenance staff that can board up, a building, obviously preferred, right? And then with us, right, I would still make those bills with you and make sure that your team is indemnified for those costs associated with the board up.
How fast do you have to board up? Like, is that like a
Pretty-
Can
pretty
you wait till the
immediate.
morning to do it, or is that like a?
It's your obligation to prevent from further damage. So what does that mean? I mean, if you have a hole in the roof and it's in the middle of the night, like you don't need people going up to your roof in the middle of the night. That causes more problems. But during the day or, in the evening, boarding up the windows, depending on the area of Chicago, unfortunately, fires invite a lot of folks, right? So you don't want people camping out in a burnt down building that you're responsible for. So I always recommend we board it up right away.
Yep. All right. So
But wait,
Go
that's
ahead.
also sorry, but
I told you to wait.
I didn't mean to tell you to wait. I wanted to finish because I don't know if I answered
I don't
your
know- I
question.
don't know if you did either, 'cause
I
it
didn't know if
took-
I directly answered your question.
next time, just put the finger on the lip. Shh.
What does Joe the investor do when he gets 4312 phone calls trying to board up the building? What's your?
I would say
advice?
that I usually tell people, hey, we have somebody who's taking care of it. Thank you.
Okay, at least gives you some space to think about it.
Because like you need to think first. Usually investors don't get in too much trouble just having a board up company board up the building.
Yeah, and we've done it before, but
right,
you
it
just
may,
gotta
maybe 2,000 versus you could have got it done for 1,500, but like it's the middle of the night and like who cares? Like you're gonna get it paid back. It's when the board up company then brings like drying equipment into a burnt down building and puts it in a fire unit that's going to be demoed anyway. That's typically where you get in trouble, right?
Yeah.
So all right, so the takeaway is like make sure you if you are going to utilize those companies, which there are some value, like you said, if it's 2 a.m. and you're in Englewood, you should board up that place. Like, and but be specific to the scope. Make sure the place is secure, no one can get in, the windows are boarded,
And get a dollar amount.
and
No more, no less.
Yes. Okay. So the scope. There you go. There you answered the question now. You can talk now, Tom. You're good.
I don't remember what I was going to say. All right. So then how long, like, let's say you have a fire. So the first, like, 48 hours or whatever are crazy, right? Like, displacing tenants, you're boarding up. Then, like, what happens over the next 2-3 weeks, right? Like, because if the building's still, the building's, like, just there, you're not getting your money from the insurance company anytime soon.
Nope.
So talk about that interim, about what's happening behind the scenes with
Yep.
you,
So
with the
what's-
company.
What's happening behind the scenes is, we're working with the carrier to assign an adjuster from the carrier who represents the carrier to meet us on site and start walking through that scope.
And real quick, like, how many, like, when there's a fire, how many times does someone not have the public adjuster?
Too frequently.
Right? Like, that's, right? Like, but, like,
I think more times than not.
Yeah,
I mean,
more-
but yeah, people don't know that you could hire someone to fight for
Yeah,
you.
a lot of people unfortunately don't know that like public insurance adjusters exist until something bad happens, right? So a lot of times people are like, "Oh, I wish I knew.
Yep.
I didn't know." How come people don't know?
All right, and then we'll continue. But what would you say to someone who's like, well, let me see what the insurance company gets me, and if I'm not happy with it, then I'll bring in the public adjuster. What would you say to that strategy?
Yeah, I think that, personally, I don't like that strategy. And I always use the analogy like you wouldn't go to court and let the judge like throw the book at you to then go hire a lawyer, right?
you lose leverage. I would imagine.
You lose leverage, you lose time, you lose, could be hundreds and hundreds or millions of dollars because, you know what you know, but you don't know sometimes what you don't know. And, especially with like real estate investors and like deal guys and like people like the chase and the negotiation, whatever. And a lot of times it like that MO, like it hurts them because they're missing the big picture. And so to that like question, we're most effective when we can steer the ship and
Yep.
we can create the strategy and we can create the timeline. We can create, the environment for you to be the most successful
First, you come in left field.
versus you're coming in after like,
Reacting.
and actually like when we were talking at the Renovo event, great event, down the street from, Luke Blahnik, like he referred us a loss a couple doors down. The insurance company offered this building owner who had a little restaurant and apartments above, $127,000. We settled that same claim for like $850,000.
Yeah, it's insane.
And it was just a matter of like, making sure that the right people were on the bus. Sometimes these are huge conglomerate companies, right? Where they're sending a small claims adjuster. They're sending somebody who was at AT&T customer service 2 weeks ago, and now they're an insurance adjuster. So it's like important to have like the right team and the right, you use a lawyer to buy a building, you use a public adjuster when you have an insurance claim.
That's 120. That's a huge dollar amount that person could have lost out. How does, this might be more of an opinion question, like how does the industry get away with that? How is consumer protection that's outright. That sounds like it could be sounding fraudulent, even like that you're screwing your client, your customer. Bad.
Yeah. I don't want to be cynical, but that is their job to pay out. Like they're running a business, and every claim they pay out is less profit. I'm going through it right now with the title claim, and it's like it's insane.
Yeah, title companies.
It's
you need a public adjuster for title companies. That's what they need out there.
I would love it. No, I'm not sorry to divert here. They gave me one that they're paying. I was like, how the fuck does this help me? This guy's on your books. He's in your office.
It's a shame, truly, and like it's a good question, right? Or good, obviously I have so many opinions about that specific topic, but the insurance company or the insurance industry, in my opinion, right? It's one of the only industries where like the customer and the company's interests really are just so unaligned, right? Their interests are, okay, I want to give you as little as possible to go away. We want to, quote unquote, right, indemnify you, but like we want to give you enough where you're like, okay, go away. But the customer who like thinks that you have a relationship with your insurance company and like, oh, I've been with the same broker and I've been with X company for all these years, that they're going to take care of you. The claims department versus the sales department might as well be.
Your broker might be the best guy ever. He's not writing.
He's not writing the check, right? Yeah. And so they're polar universes, and so it happens every single day, on like daily, that those types of spreads are achieved when you have the right people fighting and or proving your claim up to the insurance company.
What are some other examples of spreads maybe you can share?
Huge. I mean,
give us a couple other stories.
This was one right now. Insurance company started at $60,000.
Where's that? Give me what was this?
Here, this was a pipe burst, custom home.
Where at?
In Royal Melbourne, like
Australia?
Country club community in north suburbs.
All right.
Pipe burst. Insurance company offered, it was, we started around, it was like 50, 60 grand, settled a claim for the mid 400s.
Wow.
Why? Because what happens a lot of times is the insurance companies will send somebody out there, sometimes right away. Sometimes it takes 2 weeks, right? It depends. On some of the commercial stuff, it takes a little bit longer. But they'll send somebody out there right away, has a smile on their face. Hey, Mark, like, we're here to help you. It's all good. Here's some money. I wrote up a scope, but, mitigation hasn't been done, or nobody's really investigated the extent of the damage. And so they write an initial scope for $40,000 because they were there for an hour and they took some photos and they're like, okay, all right, this is where we're at. When the reality is okay, that water damage, it started on the top floor and it went all the way to the basement, right? But you needed to open up some walls, you needed to do some mitigation, you needed to do some things in order to prove your claim. But like they were there for an hour, right? And so that was one. I got smaller one right now, whereas like insurance company offered $10,000, we settled it for 90 something thousand.
What was the scenario?
This was like a condensation line. Condensation like pump ruptured, same kind of story. So it happens like regularly. A big one would be a manufacturing facility. The claim, our first kind of initial offer was 800 something thousand, right? Settle it for $4 million. So the spreads are there if you know what you're doing and you know what you're talking about. And, it happens. I mean, I have hundreds of those case studies,
So I understand it to be best practice that, I have a fire last night. I'm going to let my insurance company know right away. But my next call is going to be sending you over the policy. Because then you'll be able to come back and say, this is I can help you here or I can't. Because you can't help everyone, right?
Yeah, right. We obviously like to help everybody and at least give them advice if we can. But, a lot of times, like investors, property managers, owners, they'll call me before they even call the insurance company, right? And they'll say, I had a fire, like I'm sending you, like just handle it, right? Make sure I don't say the wrong thing, right? Or I don't do the wrong thing. So that happens all the time. But,
Yep. All right. So going back to you're working with the insurance company, right? Like there's what you're meeting with them. You're going back and forth on negotiations. Yeah. You're getting some number that you don't like. Like walk us through some of the details.
And actually, because another thing I forgot, but like we also want to set up what's called the cause and origin investigation. So, in the event your insurance company can collect, right, from somebody else, right? A light fixture had it was a fire in a light fixture that was recently installed that was manufactured by GE, right? If the insurance company, your insurance company can go after them and subrogate, then they have the right to do so. So we'll also manage the cause and origin investigation to make sure that you're in compliance with your policy conditions and that we work with the fire investigators to make sure that they document what they need to, et cetera, et cetera.
Let me translate that. So what you're saying is you are helping my insurance company understand all their options they have to go after someone else to ultimately pay me as most possible.
Right, because they're going to pay you
and then turn around and
$1 million,
and then go settle with GE.
And if they settle for GE for $1 million, well,
basically it's an admin.
But you don't look as bad.
Yeah. Okay.
So, all right. How long? Every claim's different, but if I have a fire, when can I expect to actually be made whole? Because a lot of investors you're shelling out the money, and then you need it back, right? What's a typical timeline or some guidance around it? I know it's different every time.
Yeah. So some guidance around that, and I would say some public adjusters may have different opinion, but my opinion is that most insurance companies would issue you an advance if you ask for it, right? So the claim is easily $500,000, $600,000, $700,000 major fire. You could ask for $100,000 advance on your claim.
Wow.
To just help lessen the blow. A lot of people don't ask, right? And if you don't ask,
no
you don't
idea.
get, right? Wow. So first thing I do is I say, hey, insurance company, I need $150,000 advance. They may say, I'm not giving you $150,000, but I'll give you $50,000 or I'll give you $100,000. So I always do that for my peoples. But typically, multifamily apartment fire, it's going to take, 4, 5, 6 months before it's fully settled, because we have the initial claim, right, where we initially go in and do what we need to do. And then, you're a builder, right? You're going to start fixing your building. Well, sometimes you can't see what's behind the walls, or you can't see what the city is going to throw at you that you're going to need to do. Right. And so those are supplemental claims that we want to work with you and your team throughout the process to continue to supplement to the insurance company. So we like to stay with our customers from start till it's back and rented.
Yep.
How does any of that or any of this we're talking about today change if somebody died or there's a fatality in the scenario?
It's a slower start, basically. But if somebody passes away in the fire, it changes from a liability standpoint. But as far as the property claim, it's going to proceed as normal. The issue with when people unfortunately pass away is, if they died in the fire because of the fire, then somebody's coming after you. So you really want to make sure that cause and origin investigation's buttoned up, because it's a big liability concern.
All right, another question. I've had a couple where the building was so bad, the city sent out their own demo company 2 days later and took it down. Like, how does that change your?
Yeah.
Obviously, it should most of the time be a full loss. But how does that change?
Yeah, really good question. So a couple answers. And one of the things that also we would help with in the process is getting what's called a tax and demolition form to the insurance company. So in Illinois, you have to provide a tax and demo form to your insurance company. And what that tax and demo form is that like you're current on your taxes and that there's no like demo liens from the city of Chicago on your property. And so what happens when the city's like, this is, you really don't want the city to demo your building. You rather like try to like injunction that with building court, which we would help with. To get your own people in there to demo it, because if you have a limit on your policy, for example, and the city brings in a very expensive demo firm, I mean, that comes out of your policy, right? And so it's a double-edged sword because you, as the policyholder, your building's on the ground, so you're like, oh, I'm going to get my max insurance, benefit. The reality is, if there's $1 million of coverage, what they're really saying it's up to $1 million. And so we still need to like re-stick build that building and still present our claim that it is $1 million because, people buy insurance, you buy a building for X dollars, it may be worth one thing, but the cost to rebuild it's another. And so...
That's what's crazy in Chicago. The cost to rebuild is so much higher.
How much do you think 3-flat Greystone with the basement unit
To
send their guys in
on an insurance like quote?
for them to do their money in? Or send them to demo the whole building.
Oh, for the city to demo it?
Yeah.
Oh, I don't know, like 6 figures, like a silly.
It was.
number.
It honestly wasn't as much. It ended up being 40, and I had another
I was gonna say 50.
frame that was 4, 2 front, 2 back.
Was it brick or was it frame?
The second one was framed. The Greystone was Greystone and brick. But that was now the best thing that city's ever done for me.
I just assumed it was like someone's uncle and like they can charge whatever they want, right? Like it's somebody's cousin's company.
I bought a building right before the Olympics hit, right on 61st and Eberhard, like right from the park, stone's throw from the park, and we just didn't go there for like months because we're just trying to buy as many properties as we could before they got announced the Olympics. Ultimately, they didn't, but. I went back there.
Terrible strategy.
I went back there, and
I can't believe we host the podcast.
no, it was because everything was going to turn into huge. So, but anyways, went back there, and the garage is gone. Ultimately, we're trying to figure out when we were checking our works. Like, did it ever even have a garage? Because we were buying so much stuff back then. But they came in and they tore it down for it was like $4,200 for a brick garage. I'm like, this is perfect. Like, it was the best thing the city's ever done for me. So,
what going back to that, like. Is this the typical demo court process, or is it like expedited, like where, hey, they're coming out next week to demo you?
I mean, it's expedited. There's like, oh, they're coming out tomorrow to demo you.
Yeah, okay.
Right? Like
because like demo court goes on for years.
No,
like the actual city.
not this demo court. If you have a fire and there's like
because
a main right of way or there's a big street and half the buildings cantilevered over the main street, they're not going to down that day.
Yeah.
Sometimes.
The funny thing about our building in Bronzeville is their main reason is because it was leaning. I'm like, dude, it was leaning before the fire. That was the problem I could never figure out how to solve. Like, so this is great.
Yeah.
Jeez.
It's the best solution.
So how, and you don't have to get too specific here, but like we call you, there's a fire, like, are you paid hourly? Is it just like, hey, here's the agreement, is hopefully being covered by insurance? Like, how is the actual proposal or contract
transaction go? So
you're providing a ton of value. Obviously, you're getting compensated.
So we typically charge on like a percentage on what we collect on your behalf. So depending on the size of the loss, we're going to charge a percentage on what we collect on your behalf off of the total claim.
Okay. So what if, like, going back to those examples, like, they offer 120, you got it all the way up to 8. Let's say it doesn't happen. It stays at 120. Are you still getting paid all? Like, that's the risk that I'm taking as, I'm taking the risk that, like, hey, you're going to make this number higher.
Yeah. I mean, the technical answer would probably be like, we're going to go to work for you with, an agreement that, we collect a percentage on what we get. It's never happened, truly. But if it were to happen, I just tell people like, hey, if I don't create any value for you, right? Like my business is 95% referral based, right? And it's been 95% referral based for 60 years. If we don't create value for you, like we're still going to part ways as friends.
Yep, understood. All right, we got to hear some of the craziest things you've seen. Right? We were just talking about a building we both walked in North Park that's had a terrible fire. Like, talk to us. Like, what are some of like?
Yeah, that was like a shame. I mean, so I unfortunately see that all the time where like people inherit buildings, they forget to pay their insurance, and then no good. I've seen a ton of like lover spats where person A and person B have a disagreement or something. There's a person C, right? And then building's on fire. Like happens more than you think.
Left Eye and Andre Rison, remember that? She burned down, the chick from TLC burned down the football player.
I don't remember that.
I mean,
remember Andre Rison from the Falcons.
That's who it was, yeah.
Like it literally happens more than you think. We get like fires when we're like, what happened? It's like, oh, he came back and and it's like,
I've never understood that. I'm so pissed. I want to burn something down.
well, you're actually I mean,
you're putting people in jail at this point.
Yeah,
Like, if you find the origin, like, oh, it was person C.
I mean, there's I mean, it happens, unfortunately, but like, I mean, it keeps our business moving, but that happens a lot. So those are some crazy stories. I mean, we get a lot of, silly things like, you reuse the same Christmas tree lights, and you plug the lights into an extension cord, into another extension cord, into a power bar, into like the same outlet that your AC's running. Building blows. I mean, deep frying turkeys in an apartment.
Yeah, is Black Friday a big day for you?
Huge. Massive. Massive. My wife's always like, are we going shopping? I'm like, we are not. Like, I will be working for the next, week nonstop because it never ceases to amaze me.
Is it really? So every year that's like a consistent.
Every
like
year.
My buddy's a fireman, and he's like, that's the biggest day for him.
Every year, if you text me on Black Friday, if I'm shopping, I will be at a fire for the next forever. I mean, just everywhere.
They ship like they don't do like 2 on, like 1 on 2 off. Like they are suited up for that.
My office, everybody wants to like get off on Black Friday because it's like a holiday, and I'm like, we will all be working, and so it's always been like a hard thing internally with like our team. But yeah, so like people deep fry turkeys on their like balconies in the middle of Rogers Park.
On their wooden balconies.
On their wooden balconies with a cigarette in hand, with a dry wood in a 100-year-old building, and it happens all the time. People accidentally light fireworks in their buildings when they're like, oh, I didn't think it would catch on fire, right? All the time. Some other goofy ones, in the winter, like, there's boiler buildings, there's, forced air, but a lot of times if the tenant doesn't have enough heat, right, they'll use their stove, right? And they turn their stove on and they forget. I've had people use their stove to like warm towels, right? They just put the towels in and then boom. Like just, a lot of like, handyman or like people working in your buildings use a torch down for your roof. And like,
I had that happen. It was a Saturday afternoon after they left. After half day, the roof was on fire.
Another Tuesday tip, any vendors always have their certificate of insurance.
Yeah.
It's no big deal until it's a big deal.
Man, I'm like going to go home and like read all my policies. I'm a little spooked out here.
It's like some of the smartest people in the room. They just like, you don't read your insurance policy. It's like the most dry, not fun thing to read.
Where do you see people building costs versus market costs? I'm using that wrong, but where do you see people get screwed on that? When it comes to
which it's replacement cost versus actual
cash value.
Cash value.
Yeah, that's a
and
great
like
question.
we should all be replacement cost, right? Like that's
like you should have a replacement cost policy.
Yeah.
If it's not, I tell people you need a replacement cost policy.
Now what if like some of the areas like the Lincoln Parks, the Lakeviews, like the building is worth more than the replacement cost.
Right.
Then do you is it like
Yeah.
and you swap over or
No, I mean, it's a great question. So it's a long topic, but land doesn't burn, right? And so when you're like valuing your insurance policy for Lincoln Park versus somewhere else, the cost to rebuild, typically, if you're rebuilding in Lincoln Park or Lakeview or Uptown or whatever it is,
the lot might be $1 million itself.
so like the land doesn't burn. So what's the cost to rebuild your building if it burns to the ground, right? And that's what you want to insure. That goes both ways, right? We have clients in the South and West Side who can
make a killing,
who can pick up a building for, $50,000 a door, right? But to rebuild that building is
5x.
way more, right? So those scenarios, those investors, God forbid they have a fire, versus what they put into it, right? They're going to come out further ahead.
The best deal I ever did, I've said on here before, is CIC, when you get loans with them,
Yeah.
they make you get full rebuild costs. And we were being cheap back then, and we were doing market because properties were at $30,000.
We had to save up money for the buying Olympic properties.
Yeah, for sure. It was coming, dude. But we had a fire in Fort Flat, and we paid $32,000, and it burned down. But we had the actual rebuild, and it was like $282,000 or whatever. So like that's the best. That's the best real estate I've ever done. Is the house burned down.
It's the best. Yeah, it's the best return. Yeah. So what happens is with the actual cash value, it's been happening more recently just because like insurance costs and like, just people don't know. But like if your building is in Lincoln Park and you have an ACV policy, you need to like reassess that ASAP, because the older the building, if you have ACV, the less you're going to get.
Yep.
So, right, that's one huge issue that like needs to just be given the attention it deserves. But also what's happening is there's this concept of co-insurance. And I don't know if any of your buildings have co-insurance, but a lot of times you won't know until you have a claim.
Explain what that is.
Yeah. So basically, when your broker gives you a policy with co-insurance, you're creating a partnership between you, the building owner, and the insurance company that you're going to carry a percentage of its value. And so what happens is, okay, I'm going to give you this policy. It's much cheaper, but it's an 80% co-insurance policy. And what that's saying is that if your building is worth, to rebuild it, is worth $1 million, you're going to carry at least $800,000 of insurance. Where people get in trouble is if that building cost to rebuild that building is actually $2 million.
Yeah,
you're getting 50 cents on the dollar. And what happens is the insurance companies will send somebody out to do a building valuation, and even if it's like a minor kitchen fire, right? They're still going to do that same valuation. We obviously are going to do that same valuation. In that case, right, we want to show that the building is, the rebuild is low, right? There's no crown molding here. There's no coffered ceiling, right? And the insurance company is going to want to say, oh yeah, it's such a high value, right? And it's something that, as an investor that you don't know, if somebody like me is not involved, you're like, yeah, it's worth a lot. It's worth a lot. Keep going. It's worth a lot. And then boom, you get 50 cents on the dollar. So you're, $300,000 claim, you get 150 grand because of a penalty that you've incurred.
Oh man, I've seen
that's
the
opposite of replacement costs. Like you want to. It's like taxes. You want to show as little as possible.
But
I've seen a lot of people be burned. I imagine you have as well too on
just
that.
every day. And it's like, it's so hard to like find that balance, but like insurance is that one thing where like, if you skimp out, like, and you need it, it's a problem.
Yeah, I said it a billion times. Real estate works. Just don't avoid catastrophes, avoid running out of money. Like it will work. So, all right, ready to wrap?
Ready to wrap?
That was good.
All right, what's your competitive advantage? How have you guys been able to do this for 65 years while others wish they could?
So I think our competitive advantage is that, we have multiple generations in one office. So we're able to take, old school experience coupled with like today's technology, and it makes us, really, really competitive and do a lot of good for our customers.
Yep. All right, what's the one piece of advice you would tell someone that is yet to buy their first property here in Chicago?
Just do it. Just do it. Buy
Love
it.
it.
Get in there.
What do you do for fun?
What do I do for fun? Right now, I just 2 little girls and dog, and there's not a lot of room for fun. But what I do for fun, so I have a little hobby where I throw concerts in college towns.
Nice.
And so I just put up these big concerts in college towns or resorts and sell tickets and
Really?
make a couple extra bucks. Yeah.
So you're like mini live wire. Like you're just brokering, getting whatever
So
band.
put a Snoop Dogg in a parking lot, in a fraternity parking lot, sell tickets, and
I love old school.
Yeah, basically Mitchapalooza. That's where it came from.
Oh, that's in our title. So in our title.
But yeah, spending time with my family, throwing concerts, doing hanging.
All right, awesome.
You said it so casual.
Real estate, buying buildings.
What's a good book, podcast, or self-development activity you'd recommend to our listeners?
This sounds a little. I don't know, but recently been getting into meditation a little bit.
I'm very bad at that. I've tried.
I was so bad at it, and everyone's like, "You got to just do it." And so, last 4-6 months, I've been getting into this meditation. Game changing. Highly recommended.
I can do a little breathing. I can't do much the meditation. I go to sleep.
That's why I started. I just fall right to sleep.
Yeah.
But now it's no, it's good. I don't know. That would be my thing.
Other than yourself, name a valuable resource for Chicago investors.
There's so many great people in Chicago doing great things. I don't know. Tax appeal lawyer, I guess, is really important right now. Jimmy Sarnoff. I don't know if you know Sarnoff, but
We'll link to him in the show notes, though.
Link to him. Good guy. Helps us with our, my properties and getting taxes reduced.
Cool. All right, Mitch, thank you so much. You provide a ton of value to our listeners. How can they learn more about you? Is there any way they can provide value to you?
Absolutely. I think anybody can provide value. Love to get together. Coffee, lunch, breakfast. My website, aschoenemanincompany.com. My email, mitchell@aschoeneman.com. Love to connect.
Unless it's Black Friday or after Thanksgiving.
Yes, don't call me on Black Friday or Christmas. Or unless you have a fire.
All right. Chicago Fact, who are we playing for?
All right, playing for Michael Broski. He left us a review. So Michael
That's
is
not a real person.
Self or
This guy's name is Broski.
it might be Broski. Broski sounded cooler though. Broski, Michael Broski.
That's like what you call your Polish friend. That's
No,
no way.
Brodsky.
No way.
All right. Sorry,
We just
Michael.
lost a listener. I'm sorry.
We love your name. Michael, if myself or Mitchell gets this question right, you get a $50 gift card brought to you by today's sponsor, whose name's been mentioned a couple times, Renovo Financial.
All right. So, yeah, that's who brought us together. All right. So the Schoeneman office is in Lincolnwood, if I'm not mistaken.
Yep, Schoeneman.
So when I looked at this, I was like, oh my God, they had a mayor for 50 years. It's a great question. And I realized we did this 2 months ago. So your question about Lincolnwood, roughly how big is Lincolnwood? And your options are 1 square mile, 2.5 square miles, 5 square miles, 7.5 square miles. First off, a square mile, it takes me a second to be like how many blocks is this?
Maybe eight square blocks, right?
Yes.
Yeah.
What was option
1,
C?
2.5, 5, or 7.5.
I would say 2.5.
I'll say 5.
2.5. There
Let's
it
go.
is.
Wow,
Yeah, let's
let's
go.
Wow,
It's a really small.
It only touches Skokie in Chicago, I think.
Yeah.
It's real small.
really low.
Wow.
Now, do you go crazy for the lights up there? I still drive my kids through the neighborhoods at the holidays.
Yeah. Big lights guy, for sure. If, they catch. No.
No, they're in the holidays because you both, it's almost like a competition. You have all the Christmas ones, and the Jewish guy's like, well, F you. I have this one, putting this giant menorah up, and you go down the lanes there, and
It's hilarious. Yeah, it's fun.
yeah,
That's awesome.
It's worth the drive.
Michael Broski, congratulations. You got
We have so
$50
many real listeners. You don't need to make up one.
So, man, Michael, you got the $50 gift card brought to you by today's sponsor, Renovo Financial. Thanks to Mitch, who got that question right. So, Mitch, thanks for coming on. Tom, thank you. Listeners, leave us a review. We haven't hit you up for reviews for a while, so go on there. If you leave a review, you'll have your name entered in for the Chicago Fact. So, Mitch, thank you. Tom, thank you. Listeners, we will see you next week.